Hey, what's up guys? Houston here. Look, if you're trying to find out which is the best credit card you should get to help you fix your bad credit, well, I'm going to give you a breakdown. Now, here's the thing about it. I keep telling you guys, if you're trying to fix your bad credit and you have negative accounts on your credit file, the situation is you need at least 2 to 3 positive accounts on the credit file to make up for that one negative account. All right, now here's something else you also should consider. I always tell you with collections account, all right, the thing about it, I always say if it's less than $1,000 you should pay the man, all right, if you have the ability to pay him. Now here's another interesting thing, because I know some of you, why am I going to pay a collection? Well, the thing about it, look at your situation. Are you trying to raise tens of thousands of dollars, okay? Or are you trying to buy a house? Or are you trying to get qualified for a car loan with a lower interest rate, okay? So those are the reasons why you may want to consider paying a collections. Now, in terms of paying that collections, what if the collections is out of statutes? Well, this is a different situation. If the collections is out of statutes, then what you're going to have to do, you're going to have to reach out to the collection company, all right, and let them know, hey, this is out of statutes. You cannot report this on my credit report. Once they respond, then you have to take it up with the CFPB to let them know that they're not following FDCPA guidelines, all right? Now, why did I say FDCPA guidelines versus Fair Credit Reporting Act guidelines? The Fair Credit Reporting Act guidelines, that's for the credit bureaus. With your creditors is FDCPA, all right? So there's 2 types of guidelines. So making sure you're choosing the right guidelines in terms of when you're trying to address negative items on the credit file. FDCPA, collection accounts, okay? When you have it on the credit report and you're trying to deal with the credit bureaus, it's the Fair Credit Reporting Act. That's so important, all right? Now, let's talk about some of these accounts that you should be able to get qualified for. Now, the only reason that you may not get qualified for these accounts is because your credit file is locked. Okay, so they're not able to take a look at see what's actually going on with your credit file. So you definitely would have to unfreeze your credit file in order for them to actually see what it is that they can actually do for you. Like, say with Credit.ai. Now with Credit.ai, they're looking at your banking information, all right? So your bank be able to connect to Plaid in order for them to see that you have regular deposits going on. But with Credit.ai, what they'll end up doing, they'll give you a credit line up to $1,500, okay? That'll report to the credit bureaus. Now, you have OppFi, okay? So with OppFi, they'll give you a credit line of $1,000 starting out, even if you don't have a social, even if you don't have a social security number, OppFi is willing to work with you. Now, the thing about it with OppFi and some of these other credits, they may not work in every state, all right? So I know with OppFi, they don't work in all 50 states. Now, that being said, in terms of their credit cards, they'll give you a $1,000 credit card. Once they see that you have actual on-time monthly payments for at least 6 months, then what they'll do, they'll double that $1,000 payment up to a $2,000, okay? And these are unsecured cards, so that's the reason that these cards are good. Some of you may be asking about, what about Self? Is Self secured card a good account? Absolutely. And I'll tell you why. Now, I'm not a big fan of them, but they are good because Self, not only do they offer the secured credit card, but they offer the secured loan, and now they offer rent reporting. So you can get 3 lines out of Self. Now, also, just keep this in mind. With Self, when you add that account on, they don't report the open date. Now, the reason they don't report the open date, because when you have that open date reporting as a new account, then it helps start the credit file over. You don't want that. So that's definitely one of the good options for them with Self, because they're giving you 3 accounts And those accounts don't have that open date. At least from the files I've seen, I've never seen an open date with Self. All right. Now you have Patel. Patel has a unsecured card. Now the unsecured cards start at 300 and go up to 5,000. Now here's the interesting thing about it. They have a Patel 2 card that goes from 300 up to 10,000. Now with Patel, if you do not qualify for one of those cards, they have introduced a new card. Okay, it's called the Rise card. Now it's a secured card. They charge a $49 annual fee on it, but it's a secured card. So they do give you 3 options. So if you don't qualify for the Patel 1 card, they do have the option for their secured card. All right. Now let's talk about Navy Federal. Now, first thing, the biggest challenge with most people with Navy Federal, how do you join? All right. And I always tell people, if you have somebody that's sharing the same address with you, that's already in Navy Federal, then they can invite you in because you share the same address. If you don't have anybody that's military related, okay, so that's probably the easiest way to join if you don't have anybody military related. Now, in terms of Navy Federal, you have your N Rewards card, right? So with your N Rewards card, $200. After that $200, 6 months of on-time payment, it should convert up to $2,000, right? Now, here's the thing about it. I always tell people, if you get the N Rewards card, make sure you get the pledge loan. As a matter of fact, if you're trying to go for larger lines of credit, once your credit score is up high enough, or that you have a strong enough relationship with Navy Federal, because like I told you, you can have a 580 credit score with Navy Federal and they give you a $25,000 credit card, but it depends on the relationship. So that's internal scoring. So the internal scoring is what they use for credit cards, not with the loans. All right. So just keep that in mind. Now, that being said, internal score consists of, it can help you if you have direct deposits. You want to have a flagship checking account, a savings account. You can use their money market accounts, CDs, and if you have a business, you can also use their business account. Okay, so that would help influence your internal score with them. All right, direct deposit and stuff like that. You can also use Extra Debit. It's an Extra Debit app. All right, so with the Extra Debit app, that means that they're looking at all your debit card transaction. They report that to the credit bureaus at the end of the month. Now, by them reporting that to the credit bureaus at the end of the month, that helps boost your credit score as well. Now, with Extra, they report to Equifax and Experian, okay, every month. All right. Then, if you don't have a social and you need a credit card, then you also may want to look at Opportune. Now, with Opportune Visa, their credit cards start at $300 as well. All right. So again, the more positive accounts you have on the file, especially when you have a negative file, it still should help boost up your credit score, give you anywhere from 80 to almost 100 points boost. All right. Now, one of the things about it, just keep in mind, if you're trying to fix some of the negative items of your credit, one of your biggest challenges is making sure that you reach out to LexisNexis and update all of your personal information with LexisNexis. And then once you update all your information, you want to freeze your LexisNexis, because LexisNexis is the #1 system that the credit bureaus go to in order to validate your information, in order to keep negative items off your credit. Not only that, they have Clarity, which is owned by Experian. They have Data X, which is owned by Equifax, as well as Factor Trust, which is owned by TransUnion. Okay. Now, yes, you can freeze your CoreLogic and SageStream, which is the same company. You can freeze your Innovis. Now, there's one other account that I want to tell you is Stellify. Now, Stellify is an account, but it reports to 4 credit bureaus because it reports to Experian, Equifax, TransUnion, and Novus. So if you have any questions about removing negative items, click